As we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets, having been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets. Welcome everyone to the Kindle Report. Well, we are not only in full liquidation mode, but full panic mode as the markets continue to trade the same way. Last night I told you that I thought the pattern might change as we came into this morning. There was a slight indication, maybe some stabilization, and that happened early in the session. As the day drug on, it just got worse, and we ended up printing into the 43 handle. I've got some crazy numbers to reveal to you tonight, and we'll go through the database. One day lagged, as always, during the week, but there's a lot going on here, folks, and I titled this video tonight, Will the Treasury Refinance Trigger the End of QT? So I think the Fed isn't going to lower rates. I mentioned this briefly the other day. But I think what they might do is they may halt QT. So let me get into that a little bit, and then we'll go through some elements, and I'll come back to this thoughts before we leave the opening comments. But I think what they're likely to do is to realize they're in stiff competition. This goes back to 1980. I started in the markets in 1979, and the big talk on the street back in the day was the government's going to be competing with monies that for corporations, and there was going to be this big implosion. As it turned out, it didn't work out quite that way then, but all of a sudden it looks more and more like that might be the case now, especially which we're seeing the Treasury spike up into some of these ranges that I talked about that seem like maybe we're weeks away, but we're only minutes and days away from actually happening. So a lot of times, folks, if you look back at the sequence of events of the last couple of weeks, I started realizing the market was going to stall, and then we were going to challenge the 10-period moving average. That wasn't even a thing. Now we're next phase, which I'll talk to you about tonight, hitting the 21-period moving average on a weekly, but more importantly, I think we could challenge the 10-week on the monthly. And this is getting to be somewhat serious, especially in the way that the market's trading. Now, I'm quite involved during the day Sorry, I haven't been able to be on Twitter lately, so I'll try to get some activity there, but just way too much going on in the markets. And what I'll tell you, I've watched the order book very closely, and that last hour or so, hour and a half, when we printed the 4427 level for the second time today, it was just a free fall from there. There was no bids in the markets anymore. It was just straight down, and anybody that was stupid enough to bid for anything got hit, and they just continued to sell the markets off substantially. So what I'm going to break down all that when we get into technicals here in a few minutes. It's Friday. This is the stream for Friday's activity, so there's a lot to talk about. Intermediate database, we'll go through the daily, all that good stuff. But let's just talk about, let's go to the news. I'll come back with closing on the commentary and some of my final thoughts on what I think is going on. But a lot of things continue to come out good. Walmart basically beat, and they're expanding their outlook for the next year. I talked about this yesterday. There appears to be these positive fundamentals coming out. While even, I'll give you an example here. I'm just looking at the numbers here. The Philly Fed, not a major report. It was expected to be -9. It came out +12. I mean, these are the kind of numbers we're seeing come out. I realize these are in our rearview mirror, but these are the kind of numbers we're seeing come out. Claims was down for the week. 237 was 250 last week. Continuing claims upticked a little bit, but we're just seeing this really strange picture. So if you're someone trying to do fundamentals in this market, you're nothing short of got to be totally confused about what's going on here. But we just continue to see this mass liquidation and no bid in the markets. And I'm not sure if we're going to get any kind of bounce on Friday even. We could go out the week on a very, very at the lower end of the range, and that would just set the tone for not a fun week coming into next week as well. So, and we're mid-month here in August, so just expect that this is going to get very interesting. So let's go back to what I was just talking about and what the Fed is likely to do from the standpoint of how are they going to handle this? Are they going to panic and lower rates? I don't think so, but they could stop the QT, because the real, I think, conflict that is out there is that they are competing with the Treasury. They're selling while the Treasury's trying to buy, so they're just putting extra pressure on these basically the 10 and the back end of the yield curve. So what is that really doing? What we're looking at is this is really causing some havoc with the Treasury. And I've always said we're one bad bond auction from disaster, and we're edging closer to that. So if the Fed's going to stop QT, or they could quietly in the background stop it, none of us would know. Some folks might be able to detect if they're absent from the markets. But more importantly, this would be something that they might discuss as we come into the Fed meeting next month. So my expectation is they could still raise. Maybe if this thing gets to some of these levels I'm going to show you tonight, that maybe they don't. But if they're going to do anything, it's simple, is just stop the QE or announce that they're cutting it back, or they're going to phase it out, something of that sort. I went through a couple videos ago, went through the scenario of where the balance sheet in the Fed needs to be now to service the economy because of the size, the banks, and all of that. Let me see if I can just bring that up real quick on my notes here, because it's worth mentioning. Yeah, here we go. So the bank's balances, cash on hand, all that, that's $3.2 trillion. You get another currency float, $2.3 trillion. So there's 5. You get another $700 billion for the Treasury. Reverse repos around 1.5 to 1.7. So all of a sudden, you're right in the, we'll call it 7+ zone, and they're not that far from that. So they could easily announce that they're going to scale out of the QT and then start to justify the size of the balance sheet, which I think is the likely scenario to happen. Those of you, if you recall, going back to the banking crisis last spring with Republic and some of the other Signature and some of these other banks that were failing at the time, if you recall, all they had to do was open the discount window, and that's what they did. They started this term borrowing window, and so they facilitate the banks from that standpoint. So what we're really looking at here is another one of those type of moves that are kind of subtle, but actually have a lot of effect, or potential a lot of effect. So they need to get these treasuries stopped from spiking. I just mentioned last night, I told you, when I mentioned numbers, pay attention. I was mentioning 475, 490 on the 10-year. We could spike there if this thing, and nothing's going to change from where we currently are. Although, like I said, the Fed could quietly pull back some, try to time their sales a little bit with market conditions, which maybe they didn't look like they were doing it today. The bond vigilantes are out in full force. And this is one of the things that you need to pay really, really close attention to. And as I go through the technicals tonight, you're going to see what's unfolding here on the technicals. And they have deteriorated substantially in the last 2 days. We were looking for the potential of getting down into the 43 handle. I mentioned originally it was 44.50, updated those targets down to 43. If you just look at the market grid today, we went to STX today. So we went right into 43 handle, 43.80, and there's even uglier numbers coming out. I'll show you here for tomorrow. And I'm not sure anyone's feeling like they should be buying the market at the moment. Maybe that's a perfect time for a squeeze, but the bottom line is it looks like the scenario that's been happening, I'll break this down more, what the pattern's been the last 3 sessions has happened. I thought they would maybe break that pattern today, but they didn't. Let me look at my notes here and just take a look at where we are. Make sure I've covered everything here. So tomorrow, there's no news coming out, 0. So we're operating on market sentiment, which can't be good. And then we only real earnings report coming out tomorrow is Deere is coming out tomorrow, and they probably have good numbers. We'll see. I'm not sure anyone cares, right? No one cared about Walmart. No one cared about Target. No one cared about all the good retail numbers, all of the things that happened. Retail sales was good this week. Try to find somebody that actually cares about that. You're probably going to be a little stretched to find that individual that's doing that. So let's go ahead and get into the WaveTech database. Let's get into the technicals and see what we can break down in this thing. And Sunday night may be a popcorn night. So just get ready for next week. But I'll break down what expectations for Friday. It's possible, depending on what's going on, I might do another live with some of the indicators from that standpoint. So once again, just announcing before we go into the WaveTech database is that the end of this month, the 1st of September, the discounts on the indicators will be over. So it's pretty deep discount. You'll see soon. But make sure you go to kendallreport.com/indicators, pick those up. And you're going to need a loyalty code. You should have gotten one if you bought the indicators before the first batch. You'll get a really deep discount, and I'll make sure that we send out another email in case you can't find that email. It's piled in with the rest of the junk in your inbox. Let's go ahead and get into the database. So here we go. We're at 17.53. Not any mass liquidation that happened yesterday, but we are looking at 619 sells, only 71 buys. So there's definitely some negative rotation still going on. I think this is going to trigger probably more of the liquidation on the intermediate database. Let me go full screen here, and let's just go over and take a look at the intermediate real quick here. So when we look at the intermediate database, you'll see here we're at 75.15. This is going to downtick in, I suspect, at least 68%. The numbers that we'll be watching here is around 68, 62% will be the another issue. And I see somebody picking up Evergrande. I thought they already blew up last year. I think it isn't a country something in China. Listen, markets are just keying off anything negative here right now. But this database is going to start to pull back a little bit, start to take some things out. If I go up here just a little bit, you can see there's a couple of sectors are now turning negative. We're well exceeded on the capital goods. That's been 32% gain just in the capital goods sector. And transportation's been another good one. There's still, and the other one that is long in the tooth is technology. And just looking at the intermediate, we're out of energy right now, so we're just neutral there. But the bottom line is that what we're looking at here is a liquidation coming. I don't think we get seriously going down, but if I'm right in what I'm going to show you in the technicals here in just a minute, what that's going to tell us is that you are probably going to get more liquidation than I would think. So we could see some material things start to come into play. And I'm flashing back a little bit, folks, here, going back to, I think, Q2, maybe around that time. I think right before I went to Singapore, I was talking about that. I think on the Meet Kevin interview that I did, I was talking that sometime, into August and September is where I thought we could hit a wall. And we did that. We printed, actually, I didn't really think we'd get the 46 handle, but we did. But all of this is now starting to come off. And I went through some of the stocks the other day. Tesla was a huge, looking for a 200-day moving average on Tesla. Apple is looking at 167. There's a whole lot of ugly numbers coming out of these markets all of a sudden. And I won't cover those now, but we'll definitely be talking about some things that I'll look at over the weekend. So let's go ahead and let's get into the technicals here. All right, let me pull this up. Let's go to the hourly chart. It was interesting because last night we did hit that peak. Let me show you here. At we peaked as I was talking in last evening. I thought we would rally into the open this morning. If you recall, it was projecting all the way up into these moving averages. It got there. We basically, I'll show you in a minute. We did another R1. Looked like an R1, R2, S2, and it actually went all the way to STX today. So the handle is going on. Yeah, it'll be interesting. I did take a glance at Bitcoin. It is down like $2,200. So we're starting to get some pretty serious liquidation going on there as well. And that has, and I'll cover that in detail. But one of the things that we're looking at is probably potentially bottoming out, but the bottom, all we're going to be able to do in this hourly chart is to maybe get into the 10 and 21 period moving averages. 43.88, right around 4,400 is going to be some of the resistance. I should be able to pick up these numbers here on the market grid in a minute so we can tie this together. But then it looks like weakness as we flow through This my cursor right now over here is way into Monday, but this is looking at a pretty good potential downside once we peak out in early morning again. So the pattern that we've been seeing, I'll mention again, was that we've been getting this rally. So if we're down in the morning, we rally up to R1. We've done that, I believe, 3 days in a row. And when I bring up the daily chart, I'll show you. And then we sell off and go and retest the lows. Today was a little more volatile. There was a couple tries at the downside, and we held the 14 low. And then, of course, we rallied up to 25, 27 again, and then it just collapsed all the way down into the 3 handle. So we'd have to go through some of the shorter term charts to see that. But let's go ahead and go to the daily and just set up exactly what I'm talking about. If we look at I'm going to go to 2 days ago, R1 44.65, the high was 44.67. On the downside, we went to 44.17, and that was right at S3. So we did R1 S3. This is 2 days ago. Now today's action, we did another R1. 44.36 was the high. R1 44.32, so we printed just above that, and then we came down, and you can see all the way to actually it was S3 43.78. We printed 43.77, so we got huge rejection around intraday. It was 25.27. We saw on the 5-minute chart we got some great pickups on the algos. Also, the hourly was projecting down. That last 2 to 3 hours was pretty negative as we were looking at things coming in at that point. But the bottom line is what we're looking at is the algos. If you remember, they were looking like they were going to cross over the first derivative, which said we should test the 10. Well, we never did. This weakness that we've had the last 2 days. Now what we're seeing is we're in trend mode down, minus 30. And that trend is going to be dominant. And we're looking into maybe all the way into Wednesday of next week before that downward pressure is going to bleed off. And what that tells you is that look at the 10-day simple moving average as a substantial cap on the markets, or where we should see rejections around those numbers, and possibly we'll be able to pick this up a little better on the hourly charts as we go through next week. But more pressure ahead, and even PPM2, PPM3, everything's rolling over so hard now that you have to go to the next level. So tonight I will go through into the weekly and the monthly, because I want to set that up, and by the time I get ready on Sunday night, I'll be able to break this down a little bit further for you, maybe get some better ideas. This is all coming. It's sort of like when the train's coming down the track, you have to get off the track before it gets there and anticipate it, because it's going really fast. So let's take a look, and let's go to the market grid for today, and then we'll move on. So R1 is 43.98, just under that's about where the targets are coming in on the hourly. So that could be the peak. 44.14, we saw that was the low, the initial low today. We traded 14. We bounced off of there back to 25. I think we traded 32 once, pulled back, reprinted a 27, and then the collapse came into the end of the session. But what we're looking at here from the standpoint of just the market grid, R1 will be the key to watch. 14 is probably going to be the ceiling. I don't even know if we can get a print over that. Maybe we can. The key levels on the downside, S1 is 70. That would be a new low for this run, just by a little bit. And then S2 is 43.54. And that was a fantasy number about 3 or 4 days ago. I said we could see into a mid 43 handle. Here we are. It's on a daily market grid. So this has become pretty substantial from that standpoint. So let's take a look, and let's go to the weekly. The weekly 21 period moving average, this is what I was talking about on the opening comments, is right now we're looking at that number. Let me get the values up for you here. 43.31 is where that comes in. So we have the market grid on the daily is projecting at S3. Let me go back to daily for a second so we can look at those numbers. That once again, the S3 tomorrow, 43.38. So that puts us right at that 21-week moving average. 54 is S2. That's going to be your pivot on the downside. Take out 54. Look for a tweak all the way down 38 to 31 because that's where that moving average is. So it could get fairly ugly. It didn't, like I said earlier, it didn't look like there were many people willing to step in and buy this market yesterday. It was very weak. The algos were all over it. There were monster batches of orders. Anything that looked like a bid, they were taking them out. I was looking at the order book at one stage, and I'm right around the initial bounce we got. There were pretty big orders in the book. Usually they're big orders, 200, 300. We're looking at 600, 700, and I think there was an 8 something that was stacked in the book at one stage. It looked really solid at that 14, and it did rally off of that level. They traded down into that, and they were real bids. Those bids weren't getting pulled right away. And then we saw that rally up to 27. The next time down there, those guys were nowhere to be found. There was nobody looking to buy 14s on the next round. And they just, once that buyer, whoever it was gone, they just took this thing down in a big way. So here we are, like I said, S3 is 38, S2, 54. So I think we're probably, that's going to be your extreme for this move initially. So now I'm going to switch all the way over to the monthly chart. And this monthly value, there's a couple of things I want you to see here. The 10-month moving average right now is 4,200 even. It is coming up at about 50 handles per. But it's August 17th, folks. We got a ways to go from the standpoint of before we finish this month. So we do have the STX level, which is interesting, 43.73. We printed 77. So we are at STX monthly right now. And if we did trade down there and finish down there, then we would get an STX buy. But I think that number, 4,200, I have some targets that I think are realistic here, is that 43.30. After that, we got 42.50, and there's a level below this at 41.84, which is coming up with some Fibonacci numbers that I'm looking at. So it's got the potential to be very, very negative here. And what you're going to watch for is any kind of bounces, and then you're going to be able to play off of probably if we hold 54 number on the daily, 33 number on that range. Look for some kind of bounce off of there. If we don't get a bounce and there's nothing coming out of there, then just think we're going to be really hammering this thing down. The only thing we've got going here right now is that the PPMs are still at a pretty robust level at that the 10-month moving average. That's pretty substantial. It's at 1.19. And so there's a better than even, that's 4,200, folks. We're trading, 43.70. So that's a ways down to even get to that level. And what I'm talking about here is that we should see, this is the other thing that's happening. We're not going to uptick in September. So September has further implications of weakness. So we're starting to see this weakness show up. There are, like I said, the numbers that I mentioned, pay really close attention. Maybe we get a bounce, 43.50. Let me just look here, 43.50. We'll just round numbers off, 43.30. Look for some kind of action there, maybe lending to some kind of bounce, but even that's probably going to be a dead cat bounce. There's not a lot that's in here. So markets have deteriorated quite quickly. I'm anxious to see the output from the database on the weekend on the intermediate, and that's going to tell me a lot about the internals and the relative strength that we're likely to see as we go forward. But I do think these extreme numbers I'm talking about will be just that. They'll be extremes. Originally, I thought we could get a bounce off the 10-period moving average, and as we got there, all of the algos just started to get weaker and weaker. I'm going to go back to the weekly chart here, still on S&P, but if you look at the algos, they have been indicating for the last couple of weeks that we were going to get these crossovers, and we did. And this is, I think, an interesting pattern to watch. So let's go on and take a look at the NASDAQ. Plenty to talk about there as well. All right, so this is NASDAQ weekly we're looking at. Originally, that 10 was holding real well, but we did get the, I'm just putting the cursor on Monday on the 31st of July. We did get a crossover, first and second derivative. We also crossed over on PPM2. Everything rolled over, and then the following week, we're now seeing rollover on PPM3, and even the 200 is starting to roll. And I think if we were, and we're not going to tonight, but if we looked at some of the Apples, the Teslas, and the top end of the S&P, we'll call it the, what do they call it, the Elite 7 or 8. If you look at those, these things are coming apart at the seams as well. So basically, there's a couple numbers to watch for here on the NASDAQ. I mentioned these the other night. 14,919 is one target one. And so we've actually taken that out. And then the next levels below that, 14,482, 14,212, and then the 21-period moving average on the NASDAQ is at 14,447. And we do still have a 0.61 upslope on that angle of attack. So that's likely to hold, and that's right at the S2, a Fib2 target. So if we look at Fib2 target, 14,484, moving average is at, let me just get that value there. Moving average, bear with me, 14, just 1 second here, 14,447. So they're almost spot on with each other. So that could very easily be the target here. Let's go to the daily, look at that configuration. Looks like at least one more day up. I was talking about this yesterday. It looked like we were going to try to turn today, which obviously didn't happen. And now there's another day all the way into Monday. It looks like we could come in weak, and then there's the rebound. So this is going to be interesting, folks. I don't think we're going to get to these extreme levels that I talked about down into the extremes on the S&P, going down to the monthly 42, 42.50. I think if we do anything here, we get some sort of bounce out of here, but we're going to be looking at a sailing somewhere around the 10-period moving average on the upside on all of these indexes. Just on the dailies, we're going to be hovering down the angle. That angle of attack down is going to be pretty substantial. So don't expect to see any monster rally unless our friends over at the Fed actually came in and said they stopped QT, and that would be, I think, viewed as very bullish. You'd probably see interest rates come off the whole bit. But let's just build through this stream tonight so I can get everything more or less in the pattern that I want you to be looking at from that standpoint. So Russell just Russell continues to be weak. We're almost down to the 200, which is amazing. Everything is still under pressure. PPM1, same kind of basic configuration. Next couple of days, it's got a shot at possibly going and maybe bouncing out of this level, but it's nothing substantial. It looks like coming into next week, Wednesday, Thursday, that maybe we could start to see some recovery, but there's definitely a lot to go here, folks. And like I said, I think Sunday night will be interesting to look at from that standpoint, and just pay attention to all of these downward Fibonacci's. As I mentioned, never ignore those numbers. If you have the indicators, make sure you have those on your key charts that you're watching, because they're amazingly accurate, and sometimes they'll give you an insight into where the market's going, sometimes months ahead of time. All right, let's get into the treasuries. This is where the big story is. All right, so this is getting pretty bizarre. I just mentioned don't ignore the Fibonacci targets, and this is daily. Yesterday, we got targets on the upside on the 10-year. Target 1, 442, 460, 472. I believe I mentioned those last night. And today we were able to print 432 high, went out at 437, 4.307. So that looks like, I was talking about, it looks like we're trying to get some sort of configuration here where we're getting peak momentum, but that doesn't mean the fact that some of these PPMs are trying to roll over. It just tells you we're losing some upward momentum, but all of these are in trend mode on yield. So that yield curve scenario that I'm talking about is starting to come to fruition very soon here. Let's go ahead and look at the 2-year real quick. You can see the 2-year is just flat. And this is the scenario that I painted when I went through the yield curve last week, is that the front end, the twos, and everything behind in front of it, you know, the Fed funds, the 13-week, all that, will stay fairly flat. They're not going to move. It's all the movement's going to be on the back end due to this refinancing. And, you know, I was quoted as saying that I didn't think there was going to be a liquidity crisis when we first came out of that scenario with the debt ceiling. So what I'm really looking at now is we are coming into a potential liquidity crisis. And I think if you were to be on the phone with Jay Powell and some of the other folks around the system, hopefully he doesn't spend any time talking to Grandma Yellen, because she's got nothing good to say. But the bottom line is, I would think they're talking about this, what they're seeing in these auctions, and a bunch of the foreign players are not there. There's definitely a liquidity issue going on all of a sudden with these higher yields and the new financing. So I would view a bad auction as something that was under a 2-to-1 coverage. I think the last 10-year that we did was 2.6 or 2.7. We've been seeing 3.0s across the board, and there was a bit of a tail on the auction, so we'll be watching those numbers really close from the standpoint of whether we were under. If we got under 2.0, that would be a really bad warning sign. The bond vigilantes would be all over this thing. So, but this front end is not going to be under pressure. Let me just do one more thing here. Let's put the 30-year. As I've been showing you, look at the slope on the 30. Twos are flat, 30s are going up. This is the yield curve projections that we're seeing based on all the algos and everything, and the peak values as far as the momentum goes. Doesn't mean where yields go, but we should be somewhere at the another couple of weeks toward the end of August, maybe into September, and then you see the algos are turning over pretty sharply, which just tells you momentum's flattening out, and we're probably going to stabilize up there. And maybe I've guessed it right that the Fed's going to do something with the QT. And if that's the case, then maybe we'll see some retracement here, and maybe that's what this is. Look at this. Just trying to see the break of the first and second derivative is coming in right at the end of August. Maybe expectations, maybe I won't be the only one calling for that. I don't think they're going to drop rates, but I think the QT, backing off QT makes sense, especially where the balance sheet is. And maybe they're thinking if things do start to weaken, they're going to need the extra cash on the balance sheet. So crude oil has continued to come back into some of the support levels I've been talking about, moving around toward the 77. The extreme levels that I'm expecting around 77, 75 would be extreme. But look at the PPMs, look at the algos, projecting that we're going to actually get into a pretty big downtrend down. You can see the 10-period moving averages being forecasted to start to cross over some of the longer averages. So we're potentially looking, the challenge is going to be here at around the 76.50 level. And if we break below that, then we could see some acceleration to the downside on the scenario. I got into something, folks, I just want to mention. I started looking at CRB index, Thomson Reuters CRB, trying to look and see about all this commodity inflation and stuff that people are talking about, and I'm not seeing it. And I'd almost argue that I'm about to enter, if certain things happen, maybe even enter a slight deflationary type scenario. And it's getting very interesting. Maybe things are finally starting to break. And I saw somebody on Twitter was going, watch him, he'll call for a recession and say he was always saying it. I don't call for a recession until I see it, and I haven't seen one yet, and I'm not sure one's coming. But we are definitely seeing conditions from the market standpoint starting to weaken, and all I care about is the cash flow in and out of the markets, and we're definitely seeing these shifts becoming more material, and that's what defines what I do. And you folks, index trader, we manage a lot of money in equity portfolios, and those are the things that are driving me and my clients and other folks around me to manage that risk that's coming in the market. So we've had a pretty good year for the most part, and maybe it's time to start peeling some things off. The short-term database, as you know, is all the way down to 17. We'll see what happens on the intermediate database, what that means is that's profit taking that's happening. That's not losses. That will be profit taking that's happening on all of this stuff. So definitely looking like some things going to start to flatten out a little bit more. We had that little rally into the 80, 84, 85 handle that I talked about all the way up here. Now we'll see if we can catch our breath. The 200 is probably going to be the range where we could see some stability around between 77, 76, maybe dipping down into a 75 handle. All right, gold is next. This is not making Peter Schiff happy at all. We're continuing to see we're down testing this 200 period moving average, which is very similar to that 40-week average. You've got a decent slope here, But if you look at I'll go at the very bottom, this orange indicator is the WaveTech 200 or the PPM 200. It's showing that the momentum of this 200 is rolling over. There's probably enough upward momentum yet to keep it as support right now, but we're most likely going to get locked between 1940, maybe 1900 even. There could be some 18 handle numbers in here. Let's go to the weekly, and I think this draws a picture a little bit better. So we're trading right on that 40 week right now is at, yeah, we're looking at 19. Let me just get to the right number here. Yeah. Yeah, we're looking at the 1909, and the 200 now on the 200 week is down pretty far, all the way down to 1830. We do have some live fib targets to the downside on gold as well. I've talked about this, and we're looking at 1858, 1819. So that's suggesting that we could come into this 200-day moving average and starting to look like a lot of weakness, and this may have everything to do with the configuration on the interest rates that I just talked about. All right, let's get into Bitcoin. So here we go. We had fib targets. I talked about these the other night. We got fib targets right now, 25,539. Last trade here, 20. Let me get this right number here. Last trade at 26,414. So we also have the 40 period moving average in here as well, which is plotting out right at 24.8. So we're coming into some potential support. The PPM 3, which is tracking that 40, is at a plus 1.02, so we should have decent support there. Maybe get a bounce. One of the things that, if you recall me talking about this, is that the contraction of the volatility. I've been talking about this for a number of weeks. This is on a weekly chart, that when that contraction happens, typically we'll get a sell-off. It'll break out of the bottom end of the range. Very seldom does it break out of the top end of the range on a what I call a volatility squeeze. And so we're definitely getting that breakdown. Let's go to the daily and I know there were some numbers there as well. And that's interesting. If we close here right now, we're going to get a STX buy signal, and maybe we get some stability. Looks like all the algos are saying several more days of downside, which is basically going to follow, I think, along the lines of what we see in equities. And as I pointed out, there's an awful lot of bearishness yet in that market. Let's see here, something. Yeah, so it depends on what exchange you're on. This exchange has got 26,266 is the low. So you folks know how Bitcoin is. It depends on what exchange you're looking at, but definitely got some pretty good pressure on the downside. Maybe we get an STX buy signal and get a couple of days sideways, maybe consolidate. But it looks like everything's set for Monday, Tuesday, maybe into Wednesday before we're going to see any real stability in any of these markets, folks. All right, folks, that's going to do it for today. Where we at? We're only took about 45 minutes tonight, so got through things pretty efficiently. But like I said, I see some comments here that some of these other exchanges obviously had some more selling coming in, and we saw that type of lower prices. Just looking at a couple of comments here, folks. So ATM, okay, I give up. This commentary is terrible. Thank you. Appreciate it. That was I'm seeing St. Colbert. That's the pattern that I've been talking about the last few days, and it's been very tradable. If you folks are day traders and you have the indicators, you should have been able to pick those up pretty simply. It was easy pickings today and yesterday from that standpoint. So just know that's the thing here. So let's see here. Just looking at a couple other comments. Yeah, I don't remember the database being so wonderful 2 days ago. We were already well under 42%. Yeah, I don't know. I don't see any problem. I made a lot of money in the markets. Hopefully you people have too. The algos have been spot on. So maybe need some new glasses here. Anyway, let's just see here. Anyway, folks, this is going to be it for the week. And I appreciate you folks coming, even the nice negative comments. I appreciate it. But yeah, the predictive situation as actually was predicting weeks ago that we're going to see the rollover, and I've been talking about that. And our database has been rolling over 4 weeks now, and indicating that there was an issue, and we just got into in the full liquidation mode, and that just means everything's getting blown out. So our performance on our portfolios, which is what matters, is quite good. Average up 20 to 30% this year. So it's pretty good stuff. I don't have any problems with anything that's going on here. But I do appreciate you coming. So thanks again, everyone. Have a great weekend. Good day trading tomorrow. It looks like we've got minimum news, but we're operating on sentiment, which is probably not very good. And then we'll see you on Sunday night. Have a great weekend. See you then. Bring your popcorn, I'm sure.